One of the best ways companies can return money to shareholders is by simply buying back stock. It's a very tax efficient way to return money to shareholders. You reduce the number of shares outstanding. So even if earnings remain flat, if the share count is falling, earnings per share goes up. And in theory, that should lead to a rising stock price over time. One of the companies that has been very aggressively buying back stock is General Motors. And one of the things I think is interesting is the market has not really rewarded that, but yet management has said that they will continue to be extremely aggressive in buying back shares. So today I want to put into context just how much stock GM is buying back and what we should expect for 2024. Because it's very possible that the company buys back somewhere between 20 and 25% of the company's shares outstanding in 2024 after buying back 17% of the shares outstanding in 2023. Those are the numbers I'm going to dig into today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Now, before getting too far into this, one of the things I want to highlight with GM is that the reason that I'm bullish about this company long term is not because I think they're going to grow as much as a competitor like Tesla. It's because I think the margins for all of these auto companies eventually converge over time. And what ultimately matters is how much free cash flow are you making and what are you paying for that free cash flow. So right now, as I'm recording, according to FinChat, GM's price to earnings multiple is just over 5, and its price to free cash flow multiple is 4.6. That means that the free cash flow yield, or the free cash flow per share, is over 20% right now. That's just a phenomenal value for a company that's expecting to generate $8 to $9 billion from its auto business this year. So let's get to some of these numbers. This is a look at GM's shares outstanding over the past decade. And you can see that the company has been slowly buying back stock, reducing shares outstanding by about 2% per year. That's not unusual for a big industrial company like this to just buy back a little bit of stock every year. But what management has really said over the last 6 months or so is that they're going to get much more aggressive with this. And this doesn't even show up in these charts yet, because one of the things that companies do is they report average weighted shares outstanding. So that's going to weight the number of shares that are outstanding throughout the quarter. It's not measuring what happened at the end of the quarter, which is ultimately what really matters. So let's get to those numbers. This is GM's 2022 10K. So on January 17th, 2023, there were 1,394,637,226 shares of common stock outstanding. That is a single day in the number of shares that were outstanding on that day. If you go to a year later, the number of shares outstanding on January 16th, 2024 goes all the way down to 1,154,433,287 shares, more than a 17% reduction in the number of shares outstanding. The reason that happened is this announcement on November 29th announcing an accelerated $10 billion share repurchase program. So they increased their dividend and said, hey, we're going to buy back a whole bunch of stock. And the acceleration actually happened just a few days later. Here are the details of that. They will retire $6.8 billion worth of stock immediately. And this was, I believe, on the Friday after this was announced. So one of the first days in December. So that's why you see that massive reduction. And most of the reduction happened on a single day. But this is the reason that it's so important going forward. Management expects in 2024, the auto business alone is going to generate $8 to $10 billion of free cash flow. Typically, the financing business is going to generate a little bit more free cash flow, but that can be pretty volatile depending on what happens with interest rates and default rates and things like that. So the auto business is going to be profitable, generating a significant amount of cash. The other thing that they said is that they're going to basically buy back shares with anything over $20 billion in cash on the balance sheet. Now, here's what CFO says about the company's cash balance. An analyst was asking about how much are you going to buy back in stock? If you're going to generate, let's say, $10 billion worth of stock, you have a little bit over $20 billion in cash on the balance sheet to end the fourth quarter of 2023. How much of that can we expect to go into buybacks? And he says, in part, there's no change in our stance of, call it 18 or $20 billion of cash on hand needed. So clearly we've demonstrated a renewed commitment and prioritization of returning cash to shareholders and will maintain that flexibility going forward. The analyst goes on to say, just to clarify, the 18 billion, 20 billion, is that a target or a floor? And Jacobson says that's kind of been a floor targeted range. Obviously, we've carried quite a bit more in the last few years as we've dealt with some uncertainty. But as we said in November, when we announced the share repurchase, with a lot of uncertainty behind us, lower CapEx spending, we felt comfortable operating at a lower balance. So $18 to $20 billion feels very comfortable as the targeted range. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So how should we interpret all of that? Well, GM has gotten very aggressive with their buybacks recently, and they've said that they want to keep $18 to $20 billion in cash on the balance sheet. At the end of the fourth quarter, there were $21 billion in cash on the balance sheet. So that means that they could buy $3 billion of stock back without any cash flow in 2024 and still reduce their shares outstanding. But they did say that they're going to generate $8 to $10 billion in free cash flow from the auto business. So if that number is, let's say it's 10 billion from the business overall, when you add in the financing unit and any investment that has to happen with Cruise, the market cap, as I'm recording, according to that January 2024 share count, their market cap is about $45 billion. So if they generate $10 billion in free cash flow, that means that they could buy back a little less than 25% of all of the shares outstanding in General Motors just in 2024 and still maintain that cash balance. So the story for GM has really changed. This is not a business that really needs to grow a lot. I think they still need to do a lot of adapting in electric vehicles, continue making vehicles that people want to buy. I would like to see them continuing to invest in Cruise, but this is still a company that's cash flowing a lot of money out of the business, and they're using it to buy back stock at extremely low multiples. And that is a recipe for success long-term for investors. Remember, there's still a lot of leeway. There's only about $15 billion worth of auto debt on the balance sheet. The financing debt is not something you want to include when thinking about this because that's more like bank debt. So that's backed by the loans that people are actually paying on a month-to-month basis. But the auto debt is about $15 billion. So they have a net cash balance there. So this is not the high-risk company that it was 15 years ago when GM went bankrupt. This is a very solid, very strong cash flow company, improving the capital efficiency, improving their manufacturing efficiency and their CapEx. I think all the trends are moving in the right direction for General Motors. This is why the stock is up in 2024, while competitors like Tesla have dropped dramatically. I would think that will continue this year and long-term into the future, just simply because GM is buying back an incredible amount of stock. So what do you think about GM stock? I know it's not the most popular name on the market today, but I think long-term shareholders are going to be rewarded for being patient and just allowing management to continue buying back stock at a price to earnings multiple about 4 or 5. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.